Today we're going to be talking about functional expense categories. This is particularly important to nonprofits because it's really a good way of conveying how the nonprofit has been spending its money towards the various programs, management, fundraising, membership. So let's get into it. So first, let's talk about program revenues and expenses. So programs are mission-based. So really it's to advance specific programs, and a lot of nonprofits will have multiple programs, or they may have just one, say a church that they have a single mission, or a soup kitchen that only does one particular thing. But for the most part, most organizations are going to have multiple programs, and I will do another presentation on how to determine your programs. But in general, you want to pick the things that are most important to your organization, to the funders of your organization at accomplishing your mission. So program revenue is really generally going to be related to fundraising campaigns. You send out flyers or emails, or have a campaign where you have a code that when they contribute to that code, and that's going specifically to fund that campaign and a specific program. Or you may apply for grants that support a specific program, a specific part of your mission. Or you may receive contributions just from donors that say, I want this to be used towards these activities, and you put that towards a program that matches those activities. And as a best practice for program revenues and expenses, it's really appropriate to recognize these in the appropriate class when they arrive. So you want to have some sort of class set up to track program revenues, and then you want to add those contributions to your net asset roll forward so that it's easier to track restricted funds. So expenses, like I mentioned, it's mission driven when you're talking about programs. So these expenses are going to be program expenses, will directly support the programs. This may include individuals that spend time directly working on and towards the accomplishment of the program services, or the cost of goods to provide these services. Now, some expenses may not be what you'd say are direct, because they serve multiple functions. And in this instance, we would have some sort of an allocation, which we will talk about again in a different video to keep things a little bit brief on this one. But basically, some of the things that you're going to have, such as building depreciation, communication expenses, these service the entire organization, and there are different ways that you can allocate these towards the various functions, and you should be allocating based on a reasonable type of allocation. And these will benefit program, membership development, contributions, fundraising, all of these areas. So oftentimes people use time, headcount, something like that to do the allocation, but we can talk about that in another video. After program revenues, you've got supporting services. And one of those supporting services is management and general. And these are the the types of expenses that are generally necessary for the organization to operate. You are very unlikely to receive money or record revenue into a management and general class. If you receive something that says general operations, which I've seen before, that's just unrestricted contribution. I've seen people try to restrict things to management in general previously. That's just not true. When somebody says general operations, their intent is for it to be unrestricted. Now, when you're talking about expenses, some of these activities would be your typical activities really necessary to, like I said, operate the organization. They're going to be a fallout of expenses that are not directly related to program, fundraising, or membership development. And these activities would include things like, accounting and finance, strategic planning, facility maintenance, IT maintenance, risk management, and general legal expenses such as HR and stuff. Now, if you get into legal expenses that specifically benefit one program, like maybe you're providing legal services or legal aid as part of that program, obviously that's going to be part of program expenses. But like I said, I think it's best to really just think of management and general expenses as those that are not program, fundraising, or membership development. Now, for a long time, there's been this overhead myth where people, donors, and a lot of nonprofits would think, oh, I really need to minimize my management and general expenses. And it's really something that a lot of people have stigmatized. But in reality, if I were doing an audit and I saw a nonprofit that had an extremely low percentage of management and general expenses, or even an extremely low amount of fundraising expenses, but they're bringing in tons of money, they're spending tons of money, and I know they've got like a full accounting team and all this stuff, I'm going to be very skeptical that they are accounting for those correctly. And a lot of times what I've seen is some of these, it's because they are calling management in general that are part of overhead. They're assigning those to program expenses. But remember, functional expense reporting and, say, grant or uniform guidance type expense reporting are two separate things. GAAP is separate. So remember that those overhead expenses don't all just go into program expenses. They go into program expenses for the reporting for that program, but not on your GAAP financial statements. So, like I said, I would be extremely skeptical if I saw an organization with an extremely low management in general, and it would call into a question a couple things. First is, are they misrepresenting their allocations between programs and other types of functional expenses? Or is it that they really just have not invested enough money into management in general to operate effectively, and maybe that's causing them to really just be ineffective in their programs and spend way more than they could be on program expenses? So you kind of have two sides of the coin there. I know a lot of funders like to see minimized non-program expenses, but that is just not reality. That is a reason why there is often indirect expenses built into grants. Now, for fundraising, again, you're unlikely to code any revenue to fundraising. When you have a fundraising event, you may have a campaign for one specific program and include contributions raised into that program, or you may be raising unrestricted funds, in which case it would be unrestricted, but you're very unlikely. I have seen people code things to fundraising. I actually worked with somebody that loved to do that when I worked with outsourcing at my previous firm, and that just muddles things because these donations are coming in for a specific reason usually, or they're unrestricted. But if you're putting them into fundraising, you don't know, you're not tracking it. This type of thing should be tracked separately from your accounting system. I would have a spreadsheet or a donor database where those items are tracked, both revenue and expenses for each campaign. So what kind of expenses fall under fundraising? Well, you've got sales and marketing unrelated to membership. So if you have memberships and you're doing marketing towards soliciting members, that's obviously going to be membership development. And common activities might include preparing grant proposals, preparing funding requests, fundraising events, any direct solicitations for contributions, or even passive solicitations for contributions. So this might be, you're sending out a brochure and you're really not directly saying, hey, give us money, but all you're doing in that brochure is really describing your programs in the hopes that somebody's going to find them important and give you money. So that would be more of a passive type solicitation. And then if you have seminars, now a lot of people think, oh, well, seminar, that's got to be program, but really, is it? It would be program if it was accomplishing a part of your mission, but if you're really just teaching people about something that has to do with your organization or about your mission, but you're not really accomplishing part of your mission, then that's actually a fundraising activity. Like I said, it's important to track your expenses and revenues related to fundraising, and I prefer either a donor database or a spreadsheet. It really just depends on how much activity you're going on and how much sophistication you want to get into. You can do quite a bit with just a spreadsheet. And then certain organizations really may not have fundraising expenses. For example, a church, you have congregants and they're just going to give or tithe on a weekly or monthly basis, and you're not really appealing to them through any sort of fundraising solicitation. And then again, associations, because a lot of times they're going to be membership driven and most of their funding is going to be coming from membership dues. Next, under our supporting services, we have membership development. And again, revenue is unlikely to be tracked under membership development because most of the membership revenues you receive are going to be unrestricted because it's an exchange transaction. You're going to be providing some sort of services in exchange for those membership dues. And the expenses generally are going to be related to obtaining and maintaining member relationships. So some common activities might be soliciting for new members. So you're running an ad to get new members, collecting member dues, membership relations, maintaining membership data, and other membership type activities that are not related to like fundraising. So one thing on here that I kind of think, is probably iffy is collecting membership dues, because how often do you really track the time that is spent collecting membership dues? Probably not very often. So unless you're spending money on something that is dedicated to collecting membership dues, such as some software or something, or you're hiring a third party to collect those dues for you, I don't really see how most organizations are going to separate out collecting member dues. It's usually just going to happen. It often is going to get classified into membership or into management in general. But if it is substantial and is something that you can track, then you do want to separate that out into your membership development. So what does membership development not include? Well, it does not include if you're selling additional goods or services to members. So let's say a member gets a subscription to your journal and they also get to attend 3 events during the year. Well, if say you are allowing non-members to attend those events, well, that's not going to be classified as membership development when you sell those. Or if you're selling additional services, like say your members will pay extra for a specific report, well, marketing those reports probably does not fall under membership development because you also make those available to other people. So those types of items are not going to be included in membership development. Instead, they're going to be part of your management and general expenses. So let's go over a couple of examples. Example 1 is we've got Leaf and Bean Conservatory's mission is to spread awareness of the uses and benefits and preserve the variety of coffee and tea plants. During the past month, the conservatory, 1, held a plant exhibition to raise awareness about the conservatory's mission and teach locals about the best plants for indoor growing. It 2 hired a new accounting manager whose primary function is to review accounting, prepare budgets, and oversee the staff accountants. And 3, it also published an informational pamphlet about various herbal tea recipes and benefits. So how would each one of these activities be classified? Well, the first activity, this involves a fundraising activity because it's raising awareness about the mission, but it does not directly work towards the conservatory's mission because it's just raising awareness. Now, if the exhibition meets certain joint cost criteria, which include content, scope, and audience, then it may be able to break out the part where it's teaching locals about the best plants for indoor growth into a program activity expense. And we will do another video about joint costs because that would make this a very long presentation. Second, the accounting manager's activities, those would all fall under management in general. And then publishing the informational pamphlet, it doesn't have any sort of a fundraising component to it. It's not teaching about the mission, it's providing information to accomplish the mission. So this is providing benefit to those who take or receive this pamphlet, and it's working towards the mission. So this would be a program activity. Now, the second, we have the Association for Law and Governance had a gala to raise money for local law enforcement officers injured in the line of duty. During the gala, the association donated a total of $1 million to various local organizations, benevolence funds to distribute to officers in need of help with injury-related medical costs. So how would each of these activities or functions be classified? So the first, the expenses related to the gala would be classified as fundraising because they are really raising money for their goal is to raise money. And then the second is the donations to the local organizations would be classified as a program activity because this is fulfilling their mission. Those organizations are going to then pass the funds on to the appropriate people to help them with their injuries. Now, you might be wondering, well, what about the revenue? So the revenue, depending on whether revenue is given specifically for that purpose that people donated, that the organization donated money for, well, it might be restricted to that, but some people might have also contributed in a way that it's unrestricted. So it really depends on the wording of any contributions. Now, what you can do in a situation like this is, say you want to raise donations as part of this, and you say in your leaflet, we're going to, for the gala, we're going to be donating money from the funds raised to help injured officers, and your donations will go towards this. You might also include somewhere in there that if the total donations exceed what you give to those officers, they can be used for unrestricted purposes so that you're not locked into that. And revenue classification. So in summary, functional classification and reporting really provides valuable information when used properly. Additionally, when presenting a functional expense statement or schedule, it's really important to break out program activities in a way that makes sense and doesn't overwhelm. And I am going to do a separate video on that to keep this one brief. So our next video will be on breaking out nonprofit program activities and allocating indirect expenses. If you need any help with nonprofit accounting, consulting, strategy, go ahead and reach out to me at silverspringaccounting.com, and I'll see you next time.